Welcome back. It's time now to take a look at the top business stories. Etisalat to invest $100 million into Afghanistan's mobile phone market. Gulf debt issuers look at Asia. And Bank of Japan pours record 15 trillion yen into country's money markets. Let's look at the equity markets first. The UAE bourses both reversed some of yesterday's gains. After surging the most in 15 months on Sunday, the DFM General Index today fell 2.5% to close the session at 1,475 points. The real estate sector was the one to suffer the most. Stocks to watch are EMA Properties. Its shares lost 4.8% after gaining 10% a day earlier. Du fell 3.2%. The Dubai Financial Market, the only publicly listed stock operator in the Gulf region, fell by 3.8%. The DFM held its board of directors meeting at 2 p.m. after the market was already closed. Arab Tech Holding lost 3.4%. Logistics company Aramex fell 3.7%. 131 million shares were traded, valued at 203 million dirhams. And over in the capital, the ADX fell 1% to close at 2,629 points. Like in Dubai, the real estate sector posted the strongest losses. Alder Properties dropped by 2.2%, Suru Real Estate by 2.8%, and RAK Properties by 2.7%. Etisalat fell by 1.3%. National Bank of Abu Dhabi also lost by nearly 3%. First Gulf Bank dropped 1.5%. Abu Dhabi Commercial Bank, on the other hand, rose 0.4%. 57 million shares were traded, valued at 63 million dirhams. And now let's have a quick look at the GCC markets, which today followed in the UAE's footsteps. And now let's look at currencies a bit closer, especially the yen trading against the dollar, with Gaurav Kashyap, head of DGCX operations at Alpari Middle East DMCC. Welcome to the show, Gaurav.
Thanks, Linda.
How are you today?
Very well.
Let's talk about the yen against the dollar. On Friday, the earthquake hit the country. We saw the yen gaining strength. Today, it reversed some of those gains. Run us through that price movement.
Well, Linda, actually, obviously, Friday's earthquake was a national calamity for Japan. You know, it's very, very sad what's happened there. And as a result of that, we saw a lot of repatriation of foreign assets from Japanese investors. This is what led to a lot of the upward price momentum in the yen. Obviously, there's also a combination of an unwinding of some carry trades, which has supported the yen on Friday's trading session. Generally, what tends to happen during times of economic uncertainty or natural disasters, investors pretty much get out of their higher yielding assets and they flee to quality assets. And the yen was a big beneficiary of this on Friday's trading session. Fast forward to this morning's trading session, the yen continued sliding to a low of 80-60 levels, but it got very good support once the Bank of Japan announced the expanded stimulus measures to 15 trillion yen.
Quite a number, huh?
It is, and that was really very supportive of the yen, and obviously this influx of yen liquidity was enough to see the yen par some of its gains from the weekend ahead.
Let's look at the oil markets a bit closer. We saw WTI West Texas Intermediate crude oil fall below the $100 a barrel mark. What has the earthquake done for the crude prices at the moment?
Well, Laura, actually Japan is the third largest importer of crude. It's actually the third largest importer of the world's commodities. What that means is because of the fear that a lot of these refineries, output centers, production units, and ports would remain closed as a result of the earthquakes, this sparked a fear that there would be a reduction in demand for crude oil. At the most recent estimates show about 1.3 million barrels were halted. Those factories were offline in the northeastern segment of the country. And as a result of that, we saw crude, the sell-off take place during Friday. Plus, the protests that were planned in Saudi on Friday went largely under the radar because nothing much happened. But that also eased some of the crude upside momentum that was, that we've seen since the beginning of the MENA unrest.
Fantastic. Thank you very much for coming in today. And now to our top stories. Etisalat, the Abu Dhabi-based telecom operator, is looking to invest $100 million this year and next into Afghanistan's mobile phone market. Half of the Afghan population have no mobile phone. The growth opportunities in the country, therefore, are vast, according to experts. The CEO of Etisalat's Afghanistan unit, Saeed Al-Hamil, said the company expects the number of subscribers to reach between 6 and 6.3 million in 2 to 3 years, up from 3 million at present. Etisalat's current market share in Afghanistan is 24%. The mobile phone operator hopes to increase it to 35%. Etisalat's revenues in Afghanistan more than doubled from 80 million dirhams in 2009 to 170 million in 2010. The debt restructuring needs of debt issuers in the Gulf region is moving companies towards markets in Asia. According to Standard Chartered Bank, investors' interest into high-quality debt is driving the appetite towards potential issuances in Asia, including the yuan market in Hong Kong. Gulf companies have also been looking at countries such as Malaysia, the world's largest Islamic bond market, to meet their capital requirements. Standard Chartered expects the liquidity needs not only of the region's companies but also of the Gulf governments to keep debt markets busy this year. The bank also stated that capital raising structures within the debt market, including convertible bonds and private placements, were gaining prominence in the Gulf region. Saudi billionaire Prince Al-Walid bin Talal and Bahrain Telecommunications Company have joined forces and, together, offer $950 million to purchase a 25% stake in Zain, Saudi Arabia. Kingdom Holding, the prince's investment company, received preliminary acceptance of the non-binding offer from the board of directors of Zain, it said in a statement. The due diligence process could take at least 6 weeks once approval is granted to start the process. Approval of the takeover offer will pave the way for Etisalat to acquire a controlling stake in Kuwaiti's biggest phone operator. Etisalat offers $12 billion for a 46% stake. Zain's board, though, last month rejected separate offers from Kingdom Holding and Batelco to buy the stake in its Saudi unit. And in our fast financial news, according to central bank statistics, the UAE bank's net income grew by over 10% in 2010 to 17.6 billion dirhams. The country's banks mainly benefited from a pickup in lending. The combined assets of the lenders rose by 6% to 1.3 billion dirhams at the end of last year, up from 1.2 billion in 2009. The UAE's electronics industry is forecast to reach $3.1 billion this year. That's according to Business Monitor International. Officials expect this growth to be driven by new devices such as 3D televisions, smartphones, Blu-ray players, among others. By 2015, analysts expect the local electronics industry to rise to $4 billion. The world's largest oil exporter, Saudi Arabia, reported that petrochemical exports grew slightly in January of this year from the same period in 2009, but fell by 31% from last December. The country shipped 2.2 million metric tons of petrochemicals from its ports in January, up from 2% a year earlier level, Saudi Ports Authority said. And after the break, we will run you through what's making the headlines in international business today. See you at the other side of the break.